Hi, I'm Rebecca.Richardson, a senior mortgage consultant with Wyndham Capital here in Charlotte, and wanted to just share a couple details of how going through a separation or divorce can impact either buying or refinancing a home. So I've been a lender for over 17 years, and I've worked with hundreds of buyers that have gone through the similar situation. And there are three main categories that can be affected. One is how income gets calculated. So if you're going to be receiving child support and alimony, there are standard guidelines requiring how long you have to receive it. Typically it's about 6 months in order for that income to be able to be calculated as qualifying income. So another thing to keep in mind are debts. If you own a property, say car or home, with your ex, and you're both on that loan, what happens if the other person has agreed to pay for it? If it's listed in your agreement, then in most cases we are able to exclude that debt, so it doesn't affect your mortgage, but it's very important to work with qualified parties, qualified professionals, to make sure that your agreement is written in the right way, so that debt doesn't follow you from qualifying. Even though you're still technically on it and it can affect your credit, it keeps it out of the mortgage qualification. The other thing that happens is sometimes what happens with the family home is that it does need to be refinanced because you've agreed to take responsibility for the payments, you're going to have ownership of it, or maybe even you need to take some of the equity out to essentially kind of buy out your ex. So in order to do that, there's some unique options that we have that will help you make sure that you get a great low rate, as well as tap into as much equity as possible to help satisfy that requirement without having to dip into other assets. So again, my name is Rebecca. I'm with Wyndham Capital, and I would love to be a resource for you as you navigate this path and answer any questions that you have.